All right, March 1st, 2023, and we are here with another market update. Ken Neate, HEATHERRODA, the big sister, and Colin, Broadwater. And things have been exciting as usual. What we said prepare for, again, I mentioned this last month, is ups and downs. And there's a lot to talk about. I just want to jump in right away with Heather, and away we go.
Yeah, well, let's start out talking about sellers because there's been a lot of talk about sellers wondering if they missed the multiple offer market. Well, it's back.
Yes, they did not.
In the month of February, we put 5 listings on the market, and all 5 of those listings had multiple offers. We had 2 that had 2 offers. We had 1 that had 3, and we had 1 that had 6, and another one that had 8. And of those, 4 out of 5 had overbidding, anywhere from $10,000 to one of them being a 6-figure overbid.
And the last 2 offers that I've submitted on behalf of buyers, one had 17 offers and the second had 9.
So let's go over our February stats. So these stats are not going to reflect what we're seeing right now at all because we've had this shift once again in the upward direction. And the stats for February came from the closings that opened in December and January while it was still really slow. So for our median price, we did see a leveling out already. So we were already seeing the flat that happens right before another upward trajectory. So we stayed right at $750,000 for our median price. Our days on market was also almost exactly the same at 45. The inventory ticked up to about 8 months, but we'll talk a lot more about that in just a minute. And the number of sales was 145, which is a 25% improvement over last month and much better than December as well. So let's talk a little bit more about that inventory since we can run the stat for inventory today. When I ran it this morning, it showed 4.5 months of inventory for residential SLO County currently.
So it definitely does not feel like 4.5 months working with buyers. Yes, there are houses that are sitting for a lengthy period of time, but when the right house comes up, it sells within a weekend or a week.
So the way that we find today's inventory is to run how many listings are on the market and coming soon, active under contract, and pending. And currently there are 603. So if we take that stat of 145 closings and run the math, that gives us the 4.5 months of inventory. But the reason it doesn't feel like that is because a lot of the buyers that we're working with right now are first-time buyers. It seems that most of those buyers that Ken talked to us about last month with his stat of cross-country mortgage running more pre-approvals in the month of January than any month, I think you said, since October of 2021.
Yeah.
Right. So it seems that most of those are first-time buyers. So the activity, when we look at those 603 listings, over half of them are in the million and up mark,
Right.
even though our sales statistics are only about 1/3 of the closings within our county are 1 million and up. Our first-time buyers are usually looking more around that 800 and under price point, or in some cases, even 800 is going to be too high of a price. So let's dive into what is a first-time buyer going to find on the market. And some of our buyers, after having to work from home or stay at home over the last few years, they've eliminated condos. They want to see a little yard and enough space to work at home. And then we also have part of that stat being the 55 and over homes, which are not going to be available to our first-time buyers. So if we rerun what is on the market for 800 and under and eliminate those factors, and then look at a specific area, for Paso Robles, you're only going to find 17 listings. For Atascadero, you're only going to find 7. For Templeton, you're going to find 1. And for San Luis Obispo, all of San Luis Obispo, you're only going to find 4. So it has a much different feel for our first-time buyer pool than even the 4.5 months of inventory. So with all those new buyers that have come into the market and the lack of inventory for this particular segment of the market, it is a really great opportunity for sellers. If you are a seller and you feel like you missed that multiple offer market, if you price your home right, it's going to go quickly and probably for a higher price than what we saw in December or January. And for sellers in the higher end, it's not all bad news. We did still have 35 closings of the 1 million and up single family slow real estate. So there are some buyers out there for you. It's just not moving as hot, fast, and multiple offers as what we're seeing for the first time buyer properties. And I did reach out to my realtor friends all over the country, and we are seeing pockets of this in some other areas too. So it's not just us, but there are some areas that are not seeing this at all. So I do think people have discovered our area. And based on the trend that we're seeing right now, it seems like prices are going to continue up, at least over these next coming months here. So we may have bottomed out.
Oh, I think so. From just the little sample of feedback I'm getting, I certainly think that's the direction we're headed.
So what are you seeing out there in the lending world? What's going on with rates? What kind of predictions do you have for us? Talk to us.
Okay, well, I'll kind of tell you where rates currently are, which have gone the wrong way the last couple of weeks due to the two recent inflation reports. So those did not fare well. And we're expecting a little bit more of that. So they should bounce around this range that we've been in since November. So in November, we had the really good CPI report that got us going the right direction. And we stayed in that range all the way up until about 2 weeks ago. And then we fell out of that range, meaning rates went up a little bit, but still lower than where they were last October, where they peaked. So the trend is still down. What's in the future is a couple more inflation reports, and the next one that we feel like it's going to go the right direction is going to be on May 10th. So obviously between now and then and making predictions, of course, can't be done, but we think we're going to bounce around in this range a little bit until then and hopefully get the good news. So a conforming loan is back to 7%. We just looked at one at 7.05 this morning. And jumbo is about in the mid sixes, so 6.5 for jumbo. The anticipation with demand based on my new pre-approvals, they're mostly are first-time home buyers to jump on what we had just discussed. And it's challenging for them, of course, to compete. If you do have a smaller down payment, it makes it really hard when it's competitive because those things are flying off the shelves like we just talked about. And then to speak to people discovering our area, some of my pre-approvals are people relocating here or buying ahead of retirement and gonna rent it out and move down here eventually, etc. The inventory thing, not to keep talking about it, but I have a chart that I've shared with them earlier. And it's national, but we're at a 25-year low. We haven't had this low inventory for 25 years. So it's a little silly, and to see that change too much in the near future doesn't seem highly likely.
So are you still seeing a lot of rate buy downs and creativity like that?
I am. So the strategy that we're employing a lot is if we think the seller's price point is X at the listing price or whatever, that's what they'll accept. And then I could do the calculation as to how much of a credit we really need. We'll add that to that price and then ask for it right back as a credit to cover that temporary rate buy down or even permanent rate buy down. I am seeing more of the temporary buy down, which is either 1% lower the first year or 2% lower the 2 years, 3-2-1, 2-1, or 1-1, which means it's 3% below the start rate or the actual rate in year 1, 2% in year 2, 1% in year 3, and then the full rate for the remaining term should they still be in the loan. So that is the most used buy down right now. Not necessarily the 3 year because that's more expensive, but I'm seeing a lot of the 2 year and 1 year, and consumers are getting comfortable with the idea of like, okay, worst case, it gets to the 3rd year and I'm there forever and I can afford that because that's what I qualified at. But we're optimistic that the 2 or 1 year window is going to provide an opportunity to hopefully refinance to a better fixed in general, and they're not throwing that money away, so to speak, because they use the seller credit to get it.
And have you been successful in using that strategy with the multiple offer situation?
I have actually prevailed and won a couple of times with a credit, and it's typically, I would think it's hard to win in multiple offers asking for a seller credit, but we're building it into the price, accounting for it, in terms of appraisal and what the seller's really going to net, and that's how we've still prevailed.
So you're still coming in as the winner because your offer still nets the seller more than another offer without the
right
credit.
And then of course we're going to be as sharp as we can on all the other things, so I like to do that with all my pre-approvals to get them all the way through underwriting, be able to do a 2 or 3 week close if we have to be attractive to the seller, not have a loan contingency, and then it just leaves how aggressive can we be with an appraisal contingency or not. So it's really the terms that are helping us prevail when we win always, but especially with the credit involved.
Gotcha.
So before we wrap up, I just want to send a quick note out to buyers. If you have a 5-year plan and a payment that you can handle, purchasing a home is still a fantastic investment right now. Back in 1970, the median home price for California was less than $30,000, then rose to $99K in 1980, just under $200K in 1990, then $241 in 2000, up to $305,000 in 2010, and it was $659,000 in 2020. And rents have risen to a place where it makes far more sense for buyers with a 5-year plan to own rather than rent. If we are in that $800K and under price point, we need to be prepared to compete, have our pre-qualification ready, and keep your eye on the market so that you're ready to go out and see houses just as soon as they hit the market. All right, that does it for our March update. We'll see you in April.
Bye.
Bye.